Okay, good morning. June 18th, 2021, 8:52 a.m. And we got some stuff to cover. I see a lot of people getting fearful, not knowing what's going to go on and not understanding the situation that we're in. Thinking that just off of this Wednesday Fed announcement that we had, that this whole dynamic is changing. Everything is, completely flipped from what reality is. But look, I stay consistent. I have my strategies. I'm a bull in this market. I'm a bull with regards to gold and silver and oil. I'm a bear with regards to the dollar. Look, I don't care where the dollar goes in the short run, but it's going lower. It's going lower in the medium term. It's going lower in the long term, and it's probably going lower in the short run. There's certainly some levels that are broken in the dollar, and so seeing this upside is no surprise. And like I said, if we saw the consecutive closes above the 91 level for the dollar, it could be bearish for the market, for gold, for silver, and oil. And strength in the dollar is just never a good thing for this market. So seeing the Dow down almost 1% this morning, the S&P down 0.7, and the Nasdaq down 0.5% is no surprise to me. And I can tell you, I've been saying I'm buying the dip in gold and silver. I will be buying the dip in this market. Now, I'm not going all in or anything, but I see opportunity. And so opportunity, I'll add. And if it drops tomorrow, I'll probably add. And that's just that. I won't be changing my position on this market unless something very substantial happens. But what did we hear about this morning? We don't get any economic data this morning, really, but we heard from Fed President Bullard, who has traditionally been a guy who likes to push up the market, likes to be dovish, likes to signal that the Fed is going to increase its asset purchases. Well, we got some hawkish comments, but when you sift through the BS, you really see what they're saying. So, Bullard has been saying this stuff like, I'm open to considering these tapering of our asset purchases. And he also said, and I think this hit the market when it came out, he sees it possible that the first rate hike happens in late 2022 rather than 2023. And I think that hit gold, silver. I think that hit everything across the board. Although silver is still putting on almost 1% this morning, gold flat. So we're not falling more. And gold right around that 1775 level, which is a level that, well, it seems to have some sort of importance to it. Gold bounced below it and then came back above it. But we were at 1795 earlier this morning. So definitely Bullard talking down the market, talking down metals, everything really kind of fell off of a cliff. But there was one statement in there that really, I think, shows the fact, well, it's not a fact, it's my opinion, that the Fed will not be raising rates. The Fed will be actually increasing its asset purchases at a certain point, especially for the rest of 2021 and for 2022. And probably not for 2023 or 2024. But anyways, here's what he said. Fed's Bullard says taper of bond purchases might be tied to economic outcomes rather than autopilot. So basically he's saying that if the economy's not good, we won't raise rates. We won't taper our asset purchases. Well, what have I been explaining for a fairly long time now? The economy is in shambles. I mean, yesterday we found out over 400,000 people applied for first-time unemployment. Yet again, that was tens of thousands above more than what these economists expected. We found out, all this negative stuff on inflation, and so I don't even need to go through the economic stuff of it, money velocity at lows, labor force participation rate, whatever. But understanding that the Fed will just use the excuse of the economy being terrible, and then they'll increase their asset purchases. They will create the excuse. Right now, they're just positioning themselves. They kind of, I don't know, they had to acknowledge that inflation existed. They couldn't just come out and say, there's no inflation, we're just going to keep increasing our asset purchases. That would have really psychologically wouldn't have played well on market participants and the general population, if any of them even listened to the Fed, because nobody really listens to the Fed other than people like me, people like you maybe, but ultimately everybody's just like, oh yeah, the Fed just does this, it's just this good organization, like we need them, they manage the economy, blah blah blah, like they help us in times of crisis, all this BS that's fed to you through the education system. But I want to go back to 2018, 2019. They had this autopilot taper going on, and it was scaring the market because they kept winding down, and here's the thing about 2018 and everything. We had the Trump tax bill that was passed, and that stimulated the market. That created a lot of debt. So even though the Fed was tapering at that point, we had other inflationary pressures for the market to latch onto. And so there's always these different bases being played off of to manipulate things in a certain direction. But the autopilot scared the market, and eventually the Fed was forced to reverse that. And so they're not going to go back to that autopilot thing. They're just going to say, here's the excuse, and that is what it is. So other than that, crude oil down 1% this morning. I'm not concerned about my crude oil, my energy positions. But in terms of this market, I view the market as a buying opportunity, specifically gold and silver. I will continue to hold my positions. The market, I will be buying this morning, and that's that. I just don't believe. If you believe the Fed is going to actually hike rates and actually taper its balance sheet, you should be shorting this market. That's really that. I will not be shorting this market. I will not be being a pig either. Although I've had my experience in that domain. But yeah, that's really all there is to it. I'll see you at the end of the day. Let's see how this dollar plays out. Let's see how everything plays out. And I hope it's a good one. See you later.